Winston and Felix here, and SoFi has just made a major strategy change to kick the big banks where it's really going to hurt them. And Winston looks a little bit sleepy on that news, doesn't he? What have they done? Well, they put out a job advert. It was a little bit early stuff, but that's what we do in this channel. I'll be trying to find stuff early, let you know. They put out a job. The job title is Test Compliance Specialist Commercial Small Medium Business Operations. Now, that doesn't sound very sexy, but what it means is that they are looking at launching business banking, SME banking. And the SME banking industry in the US is worth $1.5 trillion. That's the market size in terms of loans and deposits and everything else, which is pretty significant. And it's growing at 4.5% a year and predicted to do so for the next couple of years. So why is that? Well, there are more SMEs, and we get to the real numbers here in terms of revenue and everything else that we could actually expect from this. Realistic, cautious numbers. Because, well, there's a larger digitization, more small businesses are popping up, more of them, doing things, selling things online, that kind of stuff, which I highly recommend you guys do, by the way. It's always good to have another side income. And the most profitable sectors for small and medium enterprise banking are tech, healthcare, and businesses that are sort of in large urban areas. Now, let's face it, that's basically the SoFi customer, right? They're yuppie people who've gone to college and got lots of student debt are likely to be working in urban areas and are more likely to be working in tech and healthcare and those kind of industries than, working in a hardware store, let's say, right? So that it kind of makes some sense there. And if you look at the numbers, right? So JP Morgan and Bank of America both get about 30% of their revenue from small business banking. And it's growing faster than the overall business. But Bank of America is growing at 10% a year. Pretty significant stuff. And the revenue they're getting, Bank of America is getting $37 billion in revenue from small and medium banking. JP Morgan, it's $32 billion. Wells Fargo is about another $30 billion. Those are the three big guys, so well over $100 billion revenue just between the top three. So then Felix here, and we are giving away, almost financial education. Our flagship financial freedom program is off 99% its usual price. Why? Because the world's an unfair place, and Winston said we should do something about it, didn't you? I think you did. So we are. Check it out. Link is felixfriends.org/stocks. Now, you might be thinking, well, why didn't you just give it away completely? I've tried that. Nobody completes the program. Nobody appreciates something that's free. So we made it only 1% of the original price. So enjoy. felixfriends.org/stocks. Use it while it's there. It'll be there until we hit 50,000 subscribers, which should be someday soon, Winston says. We dominate this space. So SoFi at the moment has a $1.7 billion revenue. If they take just 1% of Bank of America, JP Morgan's, and Wells Fargo's business, then what happens? Well, you get 40% extra SoFi. Very, very simple. Now, are the margins the same with business banking and retail banking? They're typically a little bit smaller. They're probably about 30% smaller. Why is that? Just because businesses tend to haggle a little bit more. It costs a little bit more to acquire the customer and all that kind of thing. But that's doing it the old way. That's doing it the JP Morgan, the Bank of America, the Wells Fargo way. SoFi has been incredibly good at having very, very low acquisition costs. And a lot of that's got to do with cross-selling, right? So I think they're probably dug into their database and looking at, out of our BizKai customers, 5%, 10% actually either own businesses or run businesses, and this might be even more, might be in positions to decide which bank to go to. We could simply acquire and cross-sell here, and then obviously they can go out and promote it and then bring more customers in, and then, offer them not just checking accounts, but obviously there's loans and there's all sorts of commercial things that companies want to use. So do I think it's a smart idea? I think it's a brilliant idea. Now, it's a little early, it's true. They are basically doing a feasibility study in terms of regulation. They want to know, how is the regulation different from consumer banking? What do we need? But they are a bank. Of course, they are allowed to do it. We just want to understand, what's the process from an operations point of view, set it up through the back end. And I like it. I like it a lot. And I mean, that's just the US as well, isn't it? You got to think about that. we roll this out into South America, Latin America, other markets that SoFi is entering into fairly aggressively with their back-end business. And I think it's smart. And I think just the one thing that I admire about SoFi a great deal is their ability to sniff out, as Winston says, businesses while they were massively under pressure with the whole student loan malarkey, right? Like, he basically has all of their business growth removed by the communist administration that's presently running the United States. And they managed to grow anyway. And they managed to grow more than they thought they would grow if they had the student loan business. So I think there's a lot in this management team that they've got going on and their processes and everything else. And Winston says, keep sniffing, guys. Smash the subscribe button if you want to stay up to date with SoFi here. I'll definitely keep you up to date with this particular story as we get more and more news. And often we find out all this good stuff through job ads with businesses, because that's often the first place, you hear about something on a website or LinkedIn or something like that. So I'll keep digging into that. I appreciate you watching. I appreciate you joining. Keep building wealth, guys.